Hey everybody, Matt McGee here with the Wolf Pack at eXp Realty. Thanks for stopping by the free agent channel. Today I want to talk about the second business structure if you're looking to set up an organization. Previously I talked about sole proprietorships, and the second form I want to talk to you about today is limited partnerships. I'm going to talk about 3 pros and 3 cons of limited partnerships, how this may be advantageous and how it may be a downfall if it's something you're looking to set up. And then I'll talk a little bit about what types of businesses often set up this structure. So, as far as the pros of a limited partnership, number 1 is the capital amount can be quite generous. Often there's a general partner, and then there are limited partners who can contribute capital to the company, and the benefit of that goes right into number 2, which is that the limited partner faces limited liability for losses. So as the limited partners contribute capital to the company, the amount of capital that they contribute to the company is what their losses are limited to. So they cannot lose in excess of what they've contributed to the company. What this means is that let's say you have one general partner and 10 limited partners, and each of the 10 limited partners contributes $100,000. You've got $1 million in startup capital into the company or contributed capital over time. Each of the limited partners' losses are limited to that $100,000. Now that can be changed, and it can also be structured differently so that not every limited partner has to contribute the same amount of capital, but something to keep in mind. The third pro of a limited partnership is a shared responsibility of work. If you have a general partner who brings limited partners into the work, often the general partner can look to the limited partners who may have different experience, background, expertise, etc., to help them run the business or the organization. This could be a big benefit for a general partner who knows how to raise capital, how to structure the business, but may not know certain facets of that particular business. Now, on to some of the cons of a limited partnership. The biggest con, obviously, is breach of agreement. If you have several limited partners that are contributing capital to a company, they may have differing opinions on how the business should be operated. Often these will be fairly defined and spelled out in the operating agreement, but if they're not, it could certainly lead to disputes, both financially and operationally, which could lead to decision-making disputes, and it could lead to a breach of agreement, and in very serious situations could even lead to dissolution of the partnership. So certainly something to be cognizant of and approach up front if this is the type of organization you're looking to structure. Second is that the general partner bears the maximum risk in the case of debts. So not always, but often the general partner is going to be fully liable personally for debts taken on by the partnership. So for example, if the limited partnership went out and were to borrow funds from a bank or a private individual, etc., often they're going to require a guarantee from the general partner, meaning that if the limited partnership had raised $1 million in capital and borrowed $1 million in debt for 50% leverage to do whatever project they were going to do, the general partner would be often fully liable for that $1 million in debt, ensuring that it gets paid off. The second con could be, or the third con, and final, is that limited partners do not have much say in decision making. Again, this goes back to the operating agreement, and everyone should have an upfront understanding of who's doing what, but often limited partners do not have as much say in how the business is operated. They're often involved in the company from a financial perspective, putting funds in as limited partners, having reduced risk, and having some upside potential as an investor rather than an operator of the company. So these are 3 pros and 3 cons of a limited partnership. Hopefully this has been helpful. Some of the reasons that people will structure a business this way could be an investment firm. Private equity firms often have funds that are structured this way, or individual investments to raise funds. Real estate developments will also be structured this way, or real estate funds that will raise capital in order to go out and do something like develop property or purchase a large multifamily family or institutional investments. So there are several reasons. If you have any questions on how or why limited partnerships may be best utilized for your business, please feel free to give me a shout or drop a comment below. If you have any other questions, concerns, or any additional comments on limited partnerships, please drop those below. I'd love to hear your thoughts. Again, I'm not an investment advisor, an attorney, or a CPA. So if this is something preliminarily that you decide may be the best organization for your company, please reach out to one of your professional advisors to assist with having your limited partnership set up. So hopefully this has been of help. Next up will be limited liability partnerships, which do carry some differences from limited partnerships. So I'll go through the pros and the cons of those. Hope you've enjoyed it. As always, please feel free to like, subscribe, and hit the notification button for additional videos that I'll be putting forth with respect to how I can help you become a free agent and financially independent.